Thank you for joining us again. You're watching Business Breakfast right here on iBrandTV. The overnight lending rate contracted by 13 basis points to 14% in the absence of any significant inflow into the system. Trading in the Treasury bills secondary market was bearish as the average yield expanded by 3 basis points to 4.7%. Across the curve, the average yield expanded at the short and mid segments due to profit taking on the 49 DTM and 154 DTM bills, respectively, but closed flat at the long end. Elsewhere, the average yield was unchanged at 5.2% in the open market operation segment. Proceedings in the Treasury bond secondary market were mixed, although with a bearish tilt, as the average yield expanded slightly by 1 basis point to 11.1%. Well, John Kanayo joins us now to help us make sense of what happened at the fixed income and money market yesterday. John Kanayo is Head Research and Strategies Imperial Asset Limited. He joins us now via the phone. Thank you for joining us, John Kanayo.
Yeah, thank you, Bomani.
Yes.
You're welcome.
Good to have you on the show. Now, let's start from the currency markets. The Naira appreciated by 0.1% to close at 420 Naira 17 kobo to the US dollar at the I&E window. Tell us about what to expect today.
Yeah, like you rightly pointed out, Naira appreciated yesterday, unlike what we had the previous day when it was down by 33 kobo, gaining representing 0.08% to close at the figure you just pointed out. I think obviously this is the fact that price of crude oil was marginally up yesterday, and I think that would have influenced the income that came into external revenue account. And I equally want to believe that obligation before CBN yesterday wasn't as much as what we witnessed Tuesday and Monday and Tuesday. I think this is, yeah.
Okay, help us understand the activities in the fixed income market yesterday. What happened? What were the exchanges that went on?
Okay, system liquidity was up yesterday, and it actually closed at 173.02 billion naira compared to a loss of 62.13 billion, or a negative of 62.13 billion that was recorded on Tuesday. I think there was inflow into the market. As such, money market rates remain in the same position. Overnight rate closed at 14%. Open repo rate closed at 13.75%. At the bond market yesterday, the market was flat. Short end was flat. Mid end, we saw bearish teeth because of sell-off on 27 February 2028. That's the 5 YTM. It was actually, the yield was up by 6 basis points. At the long end of the curve, demand came in on 21 January 2042. That's the 20 YTM. Yield compressed by 7 basis points. On the average, overall, average yield, like I pointed out, was unchanged, and it settled at 14.49%. At the automobile market, the average yield market was flat. Average yield settled at 5.61, while at the NCV market, average yield was equally flat. Average yield settled at 4.32%. What we have seen over time, like I pointed out yesterday, is in the bond market, we have seen demand coming in at the mid and long end of the curve, and in line with CBN decision to push spot rate at Monday PMA or Monday bond PMA up both at the mid, at the short, mid, and long end. But why, if you move down to Omo market and NCV market, we have seen up and down movement, largely because the yield environment in this aspect of the market has been low. If you look at, I was doing analysis this morning and equally discovered that on the average, the long end of the Omo market, the yield we have there is just about 5.75%. If you do a simple analysis against the inflation figure we have, you can see that whoever that is putting interest into this segment of the market may probably be looking at the end of the period, what am I going to get? By the time I do my simple arithmetic, I discover that my true yield will be negative. The same thing applies to NCB. I think that has been the reason why we've been seeing up and down movement in this market, especially.
Okay, I was just going to point you in the direction of the inflation rate, but let's wrap this up by looking at the expectation of analysts on a moderate session across board on liquidity constraints. What is your outlook for the week?
Okay, for the week, this week ending, like I pointed out, liquidity is up. Liquidity is expected to provide an incentive to demand, especially in the bond market. The OMO and NCV are expected to continue traction. What we have seen Tuesday, Wednesday, we expect that to be largely quiet. And it will be unchanged. Why at the bond market, mid and long end, there should be demand.
All right. That's a fine place to leave it. Thank you so much, John Kanayo. Thank you for your thoughts this morning on the fixed income and money markets.
Thank you, Bonandi, for having me, and thank you, everyone, for listening.
All right. Have a good weekend. Okay, we'll take a break now. When we come back, an estimated 15.64 million liters of petrol were smuggled out of Nigeria daily in August 2021. And this is according to Chapel Hill Denham, an investment and management bank, in its recent report. We'll bring you details in a moment. Please stay with us.